Hello, and welcome to Strategies to Manage Affiliate Nexus. Thank you so much for joining us today. I'd like to start off by introducing our presenters. Our very special guest today is Tricia Walter Meyer, who's the Executive Director of the PMA. Tricia is also a lawyer, blogger, affiliate marketer, consultant. There isn't anything she can't do. Excuse me. She is the proud owner of sunshinerewards.com, which is a cashback site, and you can also learn a tremendous amount about our industry by visiting her at tricia.me. Tricia.me, I love how that works.
Nice and short.
It's very, very good. My name is Jeannine Crooks, and I'm the Client Services Manager at Awin.com. Been in the industry basically forever, and I am passionate about affiliate nexus legislation issues. So that's why we'll be taking you through some of the stuff that's going on currently in the industry today, as well as a little bit of history and what we're looking at in the future. Just quickly, I'd like to cover a little bit about Awin.com. Basically, we are the largest affiliate network in the world. We work with 100,000 active publishers across 11 million websites. Today, as we discuss Nexus, of course, I need to put in the appropriate disclaimer that this information is presented for informational purposes only. So please be sure to contact your legal counsel or financial counsel for complete information for your individual needs and responsibilities. I'm not a lawyer, and even though Tricia is a lawyer, she's not going to.
I'm not your lawyer.
She's not your lawyer, so that's something important to keep in mind. Okay, let's start off by talking about what is Nexus. So Nexus is the linking of two or more things. So I found a relationship and called it Nexus. Affiliate Nexus, which is sometimes called click-through Nexus, is the creation of tax liability for an out-of-state company working with affiliates in a given state. That was the original Nexus that everyone started talking about when it came to the issues that involved affiliate marketing and forced tax collection. It has since expanded to include economic nexus, where two things are joined based on an economic connection. So affiliates aren't always involved to create nexus for a company. And that's one of the things we are going to talk about a little bit today. To give you some ideas of how this might work, for affiliate nexus, say an Idaho-based company worked with an affiliate in Illinois. Illinois would then require that Idaho-based company to collect sales tax for all sales made in Illinois to Illinois residents. So that's what they're trying to do, is force the Idaho-based company to become the tax collection service. For economic nexus, in that case, it merely involves selling anything to somebody living in that state. So say somebody in Oregon sold something to somebody who lived in South Dakota. South Dakota would expect you as an Oregon-based company to collect sales tax for any resident living in South Dakota. And South Dakota is particularly aggressive about this. That's why I use them as an example. But Nexus, economic nexus specifically, isn't just about selling something. States are getting more and more creative in terms of ways to try and establish nexus. So, for example, in Minnesota, if you send someone there for a trade show for more than 4 days, you have nexus in that state. In Massachusetts, if you give in-person client services, you have nexus in that state. In Illinois, if you use a company-owned vehicle to deliver something, you have nexus in that state. And in Florida, if you have 10 independent contractors soliciting sales for your company, you have nexus. Some of the other more creative ones that I've seen are if you use servers that are based in that state, or you use a company that uses servers based in that state, you have nexus. There are some that they've tried to pass that have involved something as simple as changing planes at an airport in that state to try and create nexus. States are hungry right now for revenue. They are trying to look for any way to force anybody they can to collect sales tax for them. How did it all begin? The story of Nexus. It began back in 1992 with a court case called Quill Corporation versus North Dakota. And in that, the U.S. Supreme Court forbade states from imposing sales tax collection obligations on remote retailers unless they had a physical presence in that state. It all began from a catalog sales tax dispute where there was originally a company that said, we don't have a physical presence in that state, why should we be forced to collect sales tax? So anyone who is old enough to remember getting catalogs in the mail, it would say something like, California residents add sales tax. Illinois residents add sales tax. And that's because that was where that company was physically located. If they didn't have a physical location in that particular state, they were not forced to collect sales tax. And this law was this decision was the one that supported them in that. A lot of states got very excited about the tax that they were missing due to online sales as a result of this study done by the University of Tennessee in 2009. They claimed that over a 6-year period, over $52 billion in sales tax was going to be lost by state and local municipalities. However, as time has gone on, it's actually shown that some of these forecasted revenues were off by 300% or more. So it was all a forecast. It wasn't actual, and the states that have used this as their foundation for trying to anticipate how much money they would collect on Nexus have been sadly disappointed. So it's not a good idea to do it. Right now, in 2017, we've got 21 current click-through Nexus law states and 20 states that have economic Nexus in place. Of course, the biggest ones are New York, Illinois, and California, all of which have legislation in position for this. There's new legislation issued virtually every month. And even right now, at this time of year when most legislatures are not in session, you're still finding bills being prepared in anticipation of the fall session. So there's still stuff going on nevertheless. That's happening both at the state and the federal level. Right now, legislation involving Nexus of one sort or the other, whether affiliate or economic, affects about 70% of the U.S. population, which is why this is something that's very important for merchants to be aware of as they're pursuing their affiliate program. And not just their affiliate program, just plain pursuing online sales. Because the bottom line is there's a wide variety of laws. They all have different thresholds in each state. They have different notification procedures. There's different reporting and collection and remittance processes. Every state is doing it differently, which can make you crazy. No kidding. Even accountants are not fond of this, but they're in a position to handle it, and that's something we'll be discussing in a little while. One of the most important things for merchants to realize is that affiliates are not required in many, many, many states to nevertheless have Nexus established for an out-of-state company. So it's important to understand that if you think that by getting rid of affiliates in a given state, you're going to avoid Nexus, odds are you're probably not, because that's probably not the only law that you are involved in when you sell to a resident in a state in which you don't have a physical location. So affiliates are no longer required to establish this. Tricia, this is where I'm going to ask for your help because you live in Indiana and you are an affiliate in Indiana in addition to all of your vast knowledge as the executive director of the Performance Marketing Association. So one of the ones that just passed most recently was legislation in Indiana, which basically said that if you had 200 transactions or $100,000 in sales, you were going to be forced to collect sales tax. And they based this on saying that it was the only thing to really be fair for the local sales guys who were so tiny that if an out-of-state retailer came in and didn't have to collect sales tax, that was going to be the difference. And people would choose to buy online instead of locally to save a couple of percentage points on it. Tricia, I know you wrote a wonderful post on this. Can you expand on this for me, please?
Sure. I actually, I have been following this obviously in Indiana for the last few years, and it was my understanding that the Democrats have been looking to pass affiliate Nexus in Indiana, and the Republicans who are in control had been blocking it because they'd kind of seen what had gone on with other states and decided that it wasn't worthwhile. But then for some reason the Republicans kind of did an about face all of a sudden recently, and they pushed the economic Nexus tax, which is almost even stranger. So I went out of the country. I was in London and all of a sudden got an email that said, you're dropped from the Zulily affiliate program because of your Nexus in your state. And I was really confused because I knew that we weren't looking at affiliate Nexus at all. And if anything, we might have been looking at economic Nexus, and that is in fact what got passed. So there was a lot of confusion even at the time that this was passed because there weren't any real hearings. They didn't get the affiliate marketers in the state involved. This was something that just happened very quickly, that out-of-state merchants, there's a really good chance that most out-of-state merchants have no idea that this passed. I don't think most in-state merchants or even taxpayers know that this passed. So it's a great example of how things can change quickly with people not even understanding what's going on in a state, even the people that live in the state, and probably even our representatives didn't understand exactly what they were passing. And in this case, they pulled out that old Tennessee study and said, look how much money we're losing, but didn't take into account the fact that that was actually done for Amazon was collecting in our state. So when you take out all of the Amazon revenue, it was actually a lot less. And then also take out all the other states that have a physical, or other companies that have a physical nexus in Indiana, now take all those out. Then take out all the ones that have less than $100,000 in sales or 200 transactions. And all of a sudden, it's a very small amount of money, but they're now going to have to defend themselves in these lawsuits, because we are seeing lawsuits filed in other economic nexus states. And Indiana basically said, we're going to get sued for this. So at this point, there are some merchants saying, yeah, we don't want to touch Indiana affiliates now, even though we know it's not affiliate nexus. We don't want to collect the taxes, and so we're just going to try to stay out of the whole thing and hope we don't get caught. Others that are saying, sure, we'll go ahead and collect the taxes because it's just the easiest thing to do, and it will be easier in the long run for us.
It makes it a little crazy. One of the things that I found funniest here, because I live in Colorado, was that based on the University of Tennessee study, our legislature, when they first tried passing this legislation back many, many moons ago, anticipated collecting about $5 million in the first year in taxes, and they collected $20,000. So we had a budget shortfall. Of course, they went ahead and spent the money. So we had a budgetary shortfall of $4,999,000, right? $980,000. So, can't even do the math. But I mean, it was that bad. But that's how much that has been off. And I've watched that in other states too, where they've forecast it, of how much money they were going to collect. And many, many states recently have talked about how disappointed they were in the results. I think they just thought it was going to be this, cornucopia of wealth that was all of a sudden going to come shower on them. And instead, it's hurt them. We've seen how Illinois suffered with this, that Illinois' tax collections as a state actually declined when they passed this legislation.
Right. Yeah, I think not only are you, like in Indiana, where they're now looking at, they think they're going to make all this money, but now they're losing the revenue from the affiliates that live here, and then they're also having to spend the money to defend the lawsuits. So, and I think what you said about they're not collecting as much as they thought. They thought if they passed these affiliate nexus laws, it would be great. This would be a really easy way to do it. It makes total sense. But then when the merchants dropped the affiliates, or the affiliates left the state, they ended up not getting that money anyway. So now they're saying, oh, we have a great idea. We'll just do economic nexus. Well, economic nexus is basically saying, we don't care about the Quill decision. We're just going to do it anyway. That's the bottom line.
Isn't that special?
Yeah.
Well, I love it. Well, here's one more now that I think is further complicating things, and that's the Minnesota marketplace legislation. And what that does is it's imposing tax collection on marketplaces like Amazon or eBay or Etsy. So places where there's individual sellers who are coming on board to try and sell their homemade items or whatever it is. And now those kinds of marketplaces like Amazon and Etsy are being forced to collect those sales taxes on those items, which they have not had to do in the past. Now, Minnesota's legislation goes into effect in 2019. So they're kind of hedging it, hoping that there's going to be some sort of federal level resolution on this, and that's why they put it off for basically 2 years. But there's no guarantees on that at all. And in the meantime, it's kind of making a lot of the marketplaces a little bit more nervous, because it's very complicated. They've got an awful lot of things that they have to put in place to do this. And while these guys, that we're listing here are huge companies, not all of the marketplaces are.
Right.
So, it's interesting how they're trying to go after more and more and more types of online activities to just try and collect any kind of sales tax they can get. They're going after Airbnb now. They're going after digital downloads like Netflix. Anything that they can find to tax, that's what they're choosing to tax. So.
Well, because they can make the argument that this isn't a new tax, so they don't have to. they don't have to get called out for, quote, raising taxes, because they say, well, this is money that people should have been paying anyway, so it's not a new tax. So this is a way for them to try to get more tax revenue without technically raising any taxes.
Well, isn't that creative?
Very.
Be more creative on cutting expenses? No, we won't go there. So, one of the other things that's going on right now that I'm finding interesting is that the No Regulation Without Representation Act of 2017 has now expanded the physical presence rule to cover all taxes. And as a result of this, it's going to cover all regulations. So it's not just taxes, but kind of anything that's in place. And it's now making it that there's no requirement that the person has to have any kind of a physical presence in the state, that marketplace providers have tax collection obligations. I tried to read and understand as much of it as I could on here, but I know that the implications of this type of legislation are huge. Have you studied this one at all? I know it's fairly recent that this came out.
Yeah, and what they're basically trying to do is they're trying to kind of codify Quill. So they're drawing a lot stricter lines as to what exactly the physical presence is, and it's almost going in the opposite direction of the Marketplace Fairness Act, which is our other possible federal legislation. So it's like everybody knows there needs to be some kind of solution, but we can't decide if everybody has Nexus or no one has Nexus. But we need to go one way or the other. And so, there are a lot of people that are in favor of this one just because it does codify what Quill said and draws lines a little bit more strictly and would apply to every single state. And the bottom line is every state couldn't make its own laws the way it does now. And that's the problem that we have with marketplace fairness with this one. We have the federal government saying, no, we're at least going to have a standard across the board that every state's going to be the same, because right now, as the stats that she showed a little bit earlier about how many different states have different types of laws, it's like whack-a-mole at this point.
It really is, and I understand that, but yet at the same time, I mean, we've got states that don't have any sales tax, and all of a sudden are going to come under this.
Well, but I think what a lot of the federal solutions want is that they only want to say what the physical presence required is, and then the state still gets to decide the tax they want to collect. So if you're a state that has no tax on anything, you're still not going to collect taxes for sales to your residents, no matter what. If you're a state that has 10% really high, you're still going to be able to collect that 10%. So I think just what everybody wants is to say every state can still decide how much they want to tax, if anything at all. We just want to say for sure, does every state have the right to collect those, or does no state have the right to collect those?
Well, it's sounding like
that way we take the affiliates out of it, we take the flyover, two people at a conference, take all of that out of the mix and say all or nothing.
Wow. It's going to be interesting to watch, because I'm trying to keep an eye here now on the future. So, there's some people that are very active trying to do the Kill Quill movement. So, South Dakota, Arkansas, and now Indiana, congratulations, which is designed to trigger lawsuits, and they are being most successful in triggering those lawsuits to force the Supreme Court to re-examine Quill. So we'll see what's going to happen on that. Just as general information for our audience, the court has rejected the last two attempts to force them to review that again. Although one Supreme Court justice did indicate that he might be open to it. So we'll have to see what happens now. And the court's a little bit different than the last time it came up. So
right.
It could get interesting here on that. And then, from a federal standpoint, we've got 4 bills in play. So as you mentioned before, the Marketplace Fairness Act, the Remote Transactions Parity Act, the No Regulation Without Representation Act, the Online Sales Simplification Act. So there's so many different things there, each of which are taking a different approach to try and resolve, the challenges of this issue. But we've got 50 different states with 50 different priorities and tax rates, and it makes it complicated. So, we're taking a look at it. And one of the other things, too, that I wanted to bring up, because we do have so many companies that are doing business here, are some of the international implications. So, just to quickly cover that for those folks that are with us from an international basis, if you have a U.S. presence in the here as opposed to just shipping stuff in, then you are required to collect sales tax for each state location that you actually have that physical presence in, and you're expected to collect sales tax for all other states where you are covered by the Nexus legislation. So whether that's affiliate Nexus or economic Nexus, the international guys are still supposed to collect it. I think there's been a little bit of a shift on that. Originally, because it was only a couple of states involved, they thought they could get around it. Some of them did anyway, but now that's probably not best practice anymore. And even if you've got no U.S. presence, you're still expected to collect sales tax for all states with legislation. Officially, the states don't have jurisdiction. They can't come into your country and knock down your door and say you owe us money. But some of the states, and you've seen this too, Tricia, I'm thinking even more than I have, are trying to do legislation that's retroactive. And you still owe us from 4 years ago. So if you haven't been collecting those taxes, it could get pretty ugly. Have you seen some of those aggressive types of legislation go through?
I haven't seen them passed. I've seen them attempted. It's quite possible that they've passed, but like you said, there's so many different laws and they're passing so quickly that it's almost to a point where it's impossible to keep up with all of them.
I think your comparison of that to whack-a-mole was quite appropriate because, I try and keep up on it, not anywhere near as much as you do, but, nevertheless, on behalf of Awin, that's one of my responsibilities is to keep up on this for all of our clients on a global basis. And it is changing. Some days I feel like it's hourly, especially when the legislatures are in session.
Yeah.
You can't just wait for the daily Google alert on it because stuff happened between 6 a.m. and noon. Makes it fun. So what I wanted to do as well is just quickly talk about some of the affiliate options that are available. Some of the affiliates believe that registering the business in another state will do it. So, if, for example, they register in New Jersey, but they're really based in Indiana or something like that, that they're protected because they're saying they're registered in New Jersey. But that's not a long-term solution, and there are legal implications. I mean, in fact, they're doing that specifically to try and avoid tax ramifications, which
is illegal.
Thank you.
Yeah.
Yes. Now that a lawyer can officially tell you, right?
Yeah. And as you said, it doesn't necessarily help. I mean, we had all those Illinois affiliates move to Indiana, and now we have a Nexus in Indiana.
Yes.
So even if you think you're safe, I mean, I heard it from the representative in Indiana in charge of the Nexus issues who told me this will not pass in Indiana as long as we're in control of the legislature. And he's the one that drafted the legislation that passed. So there's no guarantee.
Yeah. Well, it didn't involve affiliates, so it shouldn't hurt you, right?
Exactly.
Yeah, but not understanding kind of all the other ramifications of it. Now, it's a very complex situation, so I totally understand where legislators can't necessarily understand it all. But, some of them are just racing to try and get that money so fast that they are causing more damage than the risk reward sort of thing. So, like it says, moving to another state is not necessarily something that an affiliate can do to try and make it better. Really, one of the things that we encourage our affiliates to do is if they get rejected, help the advertiser understand their options. We want them to understand that there are choices and that getting rid of or preventing affiliates from joining a program is not going to eliminate that nexus. So what we wanted to do is talk a little bit here about the risk versus reward. So, affiliates can trigger Nexus, but other circumstances can as well. The reward is work with the affiliates. They can generate a substantial amount of revenue, which can help cover a lot of those costs that could be incurred in trying to track everything. So, it's important for a merchant who's considering starting an affiliate program to really examine everything before they move forward on it. So the bottom line is, if a company conducts any e-commerce, they're subject to Nexus laws in numerous states. Affiliates aren't the only source of Nexus, so getting rid of them doesn't take care of the situation. You need to know what's going on in every state that you're working with. And so one of the things that we're saying is outsourcing compliance is the best way to ensure that you remain compliant and protect your revenue as you're going on. So to that end, one of the things that we worked on at Awin was an affordable solution for our merchants, and we identified Taxify, which is from Sovos. So as the states are becoming more aggressive, this company actually has 40 attorneys on staff who specialize in these sorts of tax situations, which is fantastic. So they're part of a lot of the government initiatives that are going on. So, in terms of trying to keep on top of what's happening on a daily basis, that's what they do. This is their job. So one of the things that they do is they'll help you with things like sales tax permits, because a business must register within the state of location before they can start collecting the sales tax. So you can get those online. Taxify offers a state-by-state guide to help them with that. Once you've gotten registered, then you are given a sales tax number and you can start collecting. And your filing frequency then depends on a number of factors and is assigned by the state or the locality. And this is where Taxify can come into place, because they can actually help you keep track of what you need to collect, how much you got to remit, all those sorts of things. So it's important to file accurately as you're doing this. So there's 3 levels of accuracy to maintain when you're trying to do your taxes. So you want to do product taxability, jurisdiction accuracy, and any kind of exemptions to that. So, I'm talking a lot about Taxify here, but I spent a long time trying to identify who it was that would be a good partner for merchants when they're trying to identify someone that can be a resource for them. These guys fit the bill quite nicely. What I like too is that they work with a variety of different things. So from an accounting standpoint, they can work with QuickBooks, they can work with Xero, they can work with a lot of different companies. These are just an example of it. From an e-commerce standpoint, they can work with Amazon, Shopify, WooCommerce. They can work with just about everybody there. They can work also with a variety of payment processors. So it's a good resource for a lot of our merchants to be able to use to still collect all those taxes and be able to operate their business without having to hire another person to do it, because that's the part that we don't want to do. They like to say that they've got end-to-end automation, so literally a 5-minute setup, they showed me, and that's about as long as it takes. Just add the connections, you get your first month free on it. So by automating everything, you can get monthly reports, you can get annual reports, you can get all the kinds of things that you need to keep your accounting team happy with what's going on. This is one example of what they did in Colorado. They've actually been certified by the state so that users of Taxify are held harmless for tax gaps. So that means that even if somehow somebody messed up a little bit and the right tax amount was not collected, because Taxify is so determined to try and do it right and has demonstrated that to the state of Colorado, there aren't penalties for it. And this is, one example of things that they're pursuing in all the different states. So it really makes it a whole lot easier and a lot more secure for merchants when they're trying to do something like this. So some basic conclusions here. If you conduct e-commerce online, you are subject to Nexus laws. The laws are complicated. They are going to make you crazy because no two states got it the same, right? We live with this every day, Tricia, and it makes me nuts. I know that for sure.
Yeah, agreed.
I don't think any federal legislation is going to pass in the short term. That's my forecast on it. Do you concur on that?
I think it's not a priority compared to everything else going on. In a perfect world, they'd get through everything, but we know how much Congress is working on right now, and I think this just isn't one of their priorities.
I agree, which means that we're going to keep having the challenges of state by state for a while. So you need to have something that's going to be able to do that. That's why, once again, we're saying outsourcing is probably your best bet to somebody who does that. A very wise person told me, focus on what it is that you're good at and outsource the rest. I am not an accountant. I outsource my accounting, my taxes and stuff like that. And even for people that are accountants, there are so many complex laws that are involved here. There's 20,000 taxing jurisdictions in the U.S. There's no way one person's going to keep track of all this. That's why we picked somebody like Taxify to recommend as a resource and vetted them. And honestly, I've been very, very pleased with their cost. Merchants that I've got that are using them, it's costing them a couple $100s a month, which is way cheaper than trying to hire another person, much less a person who's an expert in all of this. So, excuse me, that's what we would like to recommend to folks to use. And anyone who would like to get more information on Taxify, please feel free to contact me. Here's my contact information, and also Tricia was kind enough to share her email address at the PMA, which we greatly appreciate. Thank you so much. Just so that we can help anybody try and get through this, because I see this as an issue that's bigger than just something that's affecting Awin's advertisers and Awin's publishers. This is something that affects our industry on a global basis. So if we can offer any kind of assistance to anybody in our industry to make it better and easier for them to do their jobs, that's what we want to do. Tricia, would you like to say a few words about the PMA before we close?
Just real briefly, the Performance Marketing Association, we're made up of merchants and networks and affiliates and service providers and agencies and anyone who in any way touches the performance marketing industry. So we've got a lot of great free resources. We have memberships available. If you're in the performance marketing industry in any way, I'd love for you to come check us out.
That sounds great. Well, I know Awin is a very proud member, and a lot of people that I know have individual memberships as well. So it's really a very worthwhile organization. Thank you so very much for joining us today. I really appreciate it. And if anybody has any questions, please feel free to contact us. Thank you so much, everybody, and have a great day.